And in business news, the Debt Management Office says the federal government has made adequate budgetary provisions to meet the country's foreign and local debt obligations. DMO said this in a statement made available in Abuja. According to the office, Nigeria's debt management practice is in accordance with the relevant legislation and regulations in compliance with international best practices. He says that Nigeria had over the years serviced its external and domestic debt promptly, which has made the federal government securities attractive to foreign and local investors. Citing the recent successful price $2.2 billion Euro bond in the international capital markets, which received a subscription of over $9 billion. DMO disclosed that the increased investors' interest in the FGN bonds, the Sukuk bonds, and other FGN securities attest to the country's strict adherence to best practices in debt management. Meanwhile, Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, has said that the successful issuance of the Euro bonds signposts an increased confidence in the ongoing efforts of the government to stabilize the Nigerian economy. As Nigeria continues to navigate its economic recovery plan, the exchange rates between Naira and the dollar ended the year at 1,535 Naira to a dollar, representing a 40.9% depreciation for the year 2024. I spoke to a partner and a director at tax reporting, PricewaterhouseCoopers, Mr. Kenneth Erikume. He applauded federal government's efforts aimed at stabilizing the Naira.
I like some of the elements of the budget because government is looking at stabilization. I think we've seen the big devaluation or depreciation, depending on how you want to look at it. And, you know, the price is now a bit more stable. And when you begin to look at the fact that our foreign reserves has grown to 40.2 billion as at November, it means that the central bank now has, you know, a sufficient war chest to be able to intervene in the FX market, coupled with some of the things they're trying to do. I think that also shows some signaling that government also wants to look at the, you know, the formalization of the so-called parallel market. Now, if they're able to go there and intervene in that space, then we'll begin to see significant stability in the exchange rate, and that would ensure that we're able to achieve some of the objectives which we have set for ourselves in 2025.
The Abuja Chamber of Commerce and Industry has expressed optimism for significant business growth and economic development in 2025. The Chamber's president, Mr. Emeka Obegolu, made this known in his New Year message to Nigerians, particularly the business community across the country. The senior advocate of Nigeria applauds the resilience of the business community in overcoming the economic challenges of 2024, while commending their commitment to innovation and growth, expressing hope for renewed opportunities in the new year. Meanwhile, the Lagos Chamber of Commerce and Industry says sustained fiscal reforms, exchange rate stabilization, and enhanced monetary policy coordination are necessary to foster growth in 2024. President of the LCCI, Mr. Gabriel Idahosa, said this in Lagos through the Chamber's 2024 Economic Review, that 2025 Outlook Report. He stressed that prioritizing diversification, investing in critical sectors, and policy consistency were essential to achieve the government's medium-term economic recovery objectives. The LCCI boss commended the resilience and tenacity of the Nigerian business people and the business community in general in navigating economic challenges over the past year, while urging the federal government to prioritize some key areas to unlock sustainable economic growth and improve the well-being of Nigerians in the year ahead. As stocks begin the year on a door note today as they struggled for traction after a jittery close to 2024, while the US dollar held steady and the investor sentiment stayed cautious ahead of Donald Trump's return to the White House, the start of the new year was shaping up to be a less favorable one for equities, as uncertainties over the policy of incoming US President Trump and the more hawkish Federal Reserve's outlook looked set to dominate the market's rhetorics for now. The MSCI's broadest index of Asian Pacific shares outside of Japan slid 1.2% in December, though registered gains of more than 7% for 2024. The index was last down 0.58% in the Asian session on Thursday, with volume themed given a trading holiday in Japan. However, stock features pointed to a positive opening for Europe and Wall Street. Euro Stock 50 features gained 0.74%, FTSE features ticked 0.05% higher, S&P 500 features edged 0.48% higher, Nasdaq features advanced 0.67%, Chinese stocks were battered with blue chip index down 2.65%, while Shanghai Composite Index lost 2.36%, Hong Kong Hang Seng Index slid 2.15%.